Assalamu alaikum and welcome to the Legends of Takaful, a podcast series proudly put together by actuarial partners celebrating 40 years of Takaful in Malaysia. So, who is a legend? It's easy to look back and see who is a legend, as hindsight is 2020. But what about the current leaders in Takaful? Who will be the legends of tomorrow? In this series, we'll sit down and have a conversation with pioneers and founders of Takaful in Malaysia. People who truly shaped the industry, going beyond the numbers and finding out what really inspired them, their challenges and struggles, as well as their insights. We truly hope that this will both help drive Takaful forward for the next 40 years, as well as assist countries in just starting out with Takaful. In the first 10 years of Takaful, there was only one operator, Shariah Takaful Malaysia, or STM. Anyone entering the STM office during those days knew things were done differently. The first time I went to a meeting with the CEO there, Dato' Fazli, I even remember having to take my shoes off at the entrance of the floor. They had a monopoly at that time, and they focused on establishing a presence, rather than having the cheapest rates and fierce competition. Back then, the loss ratios for motor business were noticeably better than conventional insurance, which was surprising due to the small size of STM, and the need to be large and strong enough to control the workshops. STM used Bank Islam branches as the main distribution source. The second entrant was Takaful National, or TN, the Takaful operations of the national insurer MNI. TN is now Etika and focused on agency force distribution during those days. Those days we had heavy debates on whether it was acceptable to have agents selling Takaful, promoting actually, as how the model would work, as until that point we used a Mudharabah model, with the operator paying most expenses out of surplus sharing, which occurs at the end of the year. Several years later, Maybank obtained a Takaful license, and TN eventually combined with Maybank Takaful to give rise to Etika, which had a full lineup of agency and bancassurance distribution channels for Takaful, as well as conventional insurance. During the same time, the first re-Takaful operator in Malaysia started, Ariel. So whereas the first operator relied on bank branches, and the second operator relied on its existing agency force infrastructure, Takaful Ikhlas, starting 10 years after TN, had to start from scratch. This led the CEO, Dato' Said Mohib, to drive a number of innovative solutions, including bringing the Wakala model over from the Middle East. This represents roughly the halfway point so far of the Takaful journey in Malaysia. Several years later, the era of the multinationals in Takaful began, with a range of global insurers and reinsurers recognizing the potential of this market. Prudential in particular brought synergy to its products, creating Takaful equivalents of its conventional insurance products, especially unit-linked plans. This was also the time that Bank Negara really strengthened the regulatory focus on Takaful through JPIT. Regulations were held fairly consistent between Takaful and conventional insurance, with the goal of creating a level playing field. Today, Takaful is at a crossroads in Malaysia. Although we've come a long way, we still have a long way to go to rival conventional insurance in Malaysia. Will Takaful focus on consistency with conventional insurance? Or will there be increasing innovation in the models used as well as market segments focused on? Will we be able to use Takaful to increase insurance penetration in Malaysia, especially underserved markets? Insurance in any form is about managing risks and building trust. Takaful can truly be key in many market segments in building this trust and forming the foundation of a population that understands its risks and how to manage them. This is the foundation of true financial literacy, which must be a goal for the next 40 years. Actuarial Partners has been involved since the beginning of Takaful in Malaysia and has been involved in some way with all the Takaful operators here. We truly hope that this podcast series is useful and the next 40 years of Takaful development is equally exciting. Malaysia boleh. Okay, are we ready? Round three. Okay, so the first session this morning, we talked about developing and pushing Takaful globally. And again, eyes on the prize here. These early Takaful legends, they had to go from nothing, push into new market segments. And now for the young legends of tomorrow, we say, you know, the idea is it's the same thing. We need to push into new market segments. So that was the first session. The second session, we talked about distribution channels. what was currently working, and then the digital side, and different ways of getting into new and innovative market segments. So in this third session, we're going to continue this, talking about different models and whatnot. So we'll bring forward Zainal, our managing director, to lead this session.
So welcome back. I was telling Hassan just now that you can judge by how a conference is going by listening to the questions that's being asked by the floor. So I'm quite happy that we had quite a lively discussion this morning, and it's something I think we should try and continue. And I think this next session, which I am actually moderating, is going to be interesting in light of recent development. So watch this space. Okay. So just some basically, I've written up something here which I thought would set the stage before I call the panelists up to the floor. So the Takaful model, as you will gather this morning, has evolved over time. So we started off with the Mudharabah model, and when I talked to Dr. Fazli in his session, he's not here yet. He's gone off. He's gone off. Anyway, he mentioned to me something which I never knew before. That was the fact that when they were putting together the paper on how Takaful should be developed in Malaysia, he basically looked at the financial statements of an insurance company, and he saw one line there: profit. You will see the financial statement of insurance companies. You got your premium, expenses, increase in reserve. This is IFRS 4, yeah? Not IFRS 17. Okay. So basically, he saw the word profit. Okay, profit. So in Takaful, in Islamic finance, how you distribute profit? Mudharabah. All right. So that's how the idea of Mudharabah came into being. Because you have to understand that these are the early days of Takaful, and people are grappling to determine, how you actually operationalize this Takaful concept. So that to me was an eye-opener. Okay? So the Mudharabah model, as it were, simply assumes that the surplus, and this is the key, right? In insurance, the profit is actually surplus. Surplus is after you take the premiums, you less the claims, you less the provision, and i.e. provision for incurred but not reported claims, provision for unearned premiums, reserves, as it were, and you come to the word surplus. Okay, so the Mudharabah model simplifies that and say, okay, yes, it's surplus, but let's call it profit. And that was the reason why initially there was a lot of flack, when we saw, Middle East. Sort of Shariah scholars coming to Malaysia, and we say that our model is based on Mudharabah. They were, let's put it, kindly, and says, no, they were not impressed, because for them Mudharabah means profit sharing, and effectively, in Takaful is surplus rather than profit. So that's the story of the adoption of the Mudharabah contract in Takaful. It was based to some extent by accident. And albeit that there are certain constraints that the Mudharabah has, it was successful at Shariah Takaful Malaysia. Because you think about it, the Mudharabah model basically is not conducive to the agency distribution model. Because the agency distribution model, you have to pay a commission. And if you have to pay a commission, you need to have revenue on which to pay commission. But the Mudharabah model says that we'll only give you a share of the profit, so to say, at the end of the year, right? So at the end of the year, actually this calculation, and it comes out, okay, we have a surplus today, it's X amount. 80% of the X amounts go to the shareholders, and shareholders uses that to pay for its expenses. So Mudharabah model was not conducive to the Takaful industry, but that was not really of concern to Shariah Takaful Malaysia, because for two reasons. One is the fact that it was a composite company. Therefore, even though that it was not able to generate much in terms of Mudharabah on the family side, because family Takaful is a long-term business, it was able to generate Mudharabah profits, if you like, on the general side, because you re-evaluate the contract every year, as it were. And it was the only Takaful company then in operation. So basically, if you want Takaful, you got to go to Shariah Takaful Malaysia. So it worked. Then we had the second entrance to Takaful National. And we had the story this morning whereby, once it's another Takaful company, then the case, I'm more Shariah compliant than you are, as it were, Unfortunately, this is something that happens quite often when you go on the basis of, any religion, I'm more compliant than you are, just because of the fact that, you have a product to sell. Anyway, the modified Mudharabah model, which was used by Takaful National, which is the second Takaful company in Malaysia, had some elements whereby some revenue was collected up front. And because of that revenue is collected up front, they were to afford an agency force to some extent. Okay? But then again, it was not that much, but effectively there was a start in terms of the journey towards the agency distribution force. Where I'm coming here is that you have to keep in mind that, insurance, Takaful, was mentioned just now, is not something which is bought, it is sold. And when it's sold, you need people to sell it. And when you need people to sell it, there is a cost involved. And Ravindran, I'm still, in awe with the fact that the figures that you mentioned just now, that 6 billion ringgit is spent every year to compensate 150,000 agents. I hope you got facts to back it up, because I'm going to ask you for the references for that. Okay.
We have annual report.
And you have an annual report. Okay, good.
That's for the 70,000. So you gross it up for Takaful.
Ah, okay. All right, good.
Takaful doesn't provide it.
Okay.
I checked these figures for last 5 years.
All right. So okay, I will use that. Anyway, so then the next Takaful company came on board. I think it was. I think Tamizi got to help me here. Was it Takaful, M&I Takaful, wasn't it, that company? Second company was M&I, yeah. The third one was Maybank Takaful, right? So Tamizi will help me with that one afterwards on stage. So anyway, so the issue now in terms of the operating model is that still here? He left already. Oh no. There's a question now, which is the Takaful company that actually introduced the Wakala model? There you are. He claimed it, okay. Generous enough, he kept quiet just now. Anyway, so the Wakala model was the one that was most conducive, as it were, to the agency distribution, because of the fact that you get a fee, and with that fee, you can only afford to pay commission. And because Takaful, like insurance, is sold, then actually allowed the volume of Takaful business to actually grow. And if you look at our podcast of Legends of Takaful, at the initial introduction, Hassan sort of put together a montage that shows the growth of the Takaful premium. And you saw that when the multinationals came on board with their already big agency force, which was selling conventional then, but Bank Negara allowed them to sell Takaful as well, that's when the premium just shot up. That proves the point that, agency was a critical so-called factor in terms of the growth of the Takaful industry. But we have a problem, because agency is not cheap, as Ravindra's figures mentioned just now. So it's important to realize here that the operating model only defines how the operator is compensated, whether it's through a share surplus in the Mudharabah model, all right, or a percentage of the contribution under the Wakala model. Under Wakala model, you get income immediately, you get a percentage of the premium contribution, and you can use that to compensate for the distribution model that you're using. If you look in terms of the underlying insurance risks, if you like, that is basically the top part. You need that because of the fact that you have expenses to pay, bills to pay, you've got to pay your agencies. But where the work actually is done is effectively in terms of the Tabarru, if you like, where basically insurance is pooled, or where all the risks are pooled. So this is the concept of Tabarru, and this is a very important concept without which Takaful will not have developed. And we're going to actually discuss this concept in some detail in the panel session. This, if you like, is the fuel that runs the participants' risk fund. Because that's what we call the participants' risk fund, whereby all the Tabarru is pooled, and where all the so-called Takaful non-savings type benefit are paid from. So this is where Takaful differs fundamentally from insurance. If somebody asks you in terms of what is the difference between Takaful and insurance, of course, the first thing is that Takaful is about risk sharing, insurance is about risk transfer. Simple example of risk transfer. You buy a motor cover, you pay $100, for example, for your motor cover. You pay that to the insurance company. That $100 belongs to the insurance company. It's no longer your benefit. In return, they give you a promise. Anything happens to your car, will compensate you for the loss. But it's only a promise, right? The premiums that you paid for is only not distributed as profit just yet, because regulator says, Bank Negara says, hey, wait a minute, you say your profit is $20, $100, don't take it yet. Keep the money until you have paid all the claims, and then only whatever is left over you can take. But remember, that money belongs to the shareholders as soon as you pay the premium. However, in Takaful, the difference lies in the fact that, after you take away the wakalah fee, the difference is the Tabarru. This I'm talking about general Takaful, and it goes into Takaful Participants Risk Fund. And that Participants Risk Fund belongs to the existing and future Takaful participants. It does not belong to the shareholders. Our Takaful law is quite clear. In any winding up, that Participants Risk Fund assets does not belong to the shareholders. It belongs to be distributed as well in accordance with Shariah. Okay? So the second concept, the second issue here is this Tabarru. What is Tabarru actually? What does it mean? So I won't give away too much in terms of that. Something that Brother Tarmizi will actually explain to you later on. Okay. Now the other thing is that what's important as well in any kind of ecosystem is also talent. Right? We had some discussion of that in the morning, because we have for the Islamic ecosystem, you've got already the capital market, you've got the Islamic banking, you've got the Takaful. But these three will not be successful unless you've got talent that actually are able to actually ensure that it works. And so in terms of talent, we need to have an ecosystem, a system with which we are actually providing adequate training for those people who want to actually support the financial ecosystem, the Islamic financial market. So we're happy here that we have Yusri from FM basically to explain to us in terms of what they have done in terms of developing this talent for Takaful and Islamic finance market. Finally, and it's not means it's the least, finally there's the important role that the Sharia scholars play in Islamic finance. They are the one, if you like, are the gatekeepers. All right. So basically, they ensure that whatever we put in place for Islamic banking, for Takaful, for Islamic capital market, this is in accordance with Sharia. The concept, the principles of Sharia, this is, if you like, it extends throughout the whole ecosystem. It's not basically in silo, all right? So it has to be consistent across the Islamic ecosystem, and it has to be in accordance with Islamic law. And Islamic law here, if I can just venture from the perspective of a layman, it's in accordance with the Quran, the Word of God, and also basically the sayings and basically the actions of our Prophet Sallallahu Alaihi Wasallam, right? So we need to talk about how Sharia scholars make the decision whether it's Sharia compliant or not. I mean, this morning as well, we heard that there's a school of thought that Islamic products should just replicate the conventional insurance. I think the concept of darurah has been overused in the past. All right, 40 years on in Takaful, and you look at Islamic banking, they're still in the concept of darurah to some extent. All right, so I'm not blaming the Sharia scholars in this one. To the extent it is what we are here, where we are here, is because of what we do ourselves. All right, so that is something that And I tell people as well, I say, sometimes, I get to this problem whereby, and I get this issue in terms of IFRS 17. I have to bring up this beef that I have in terms of the auditors, right? The auditors basically, when I tell them Takaful is about surplus sharing, it's about risk sharing, they look at me and I will smile. Yes, okay. So you say a card is actually just a loan? Yes, thank you, yes. Because they're thinking of Islamic banking, you see. From the Islamic banking, they see it as like, it's just contracts. Contract is made it Shariah compliant, but ultimately in terms of the working, it's still the same. But in Takaful, it's a bit different, because in Takaful, as I mentioned just now, the money that you pay for the risk pool, is not basically the money of the operators, it's the money of the participants, right? So anyway, that's my beef in terms of auditors and IFRS 17. Because the card, they say it's risk transfer. You can call it whatever you want. A rose is, whatever name you call it, is still a rose. No, that's their perception in terms of, Takaful. It is still risk transfer because you have a card. All right, they tick the box. Card, risk transfer. Impossible to change their mind. Okay. So here, in terms of when you replicate products, and this is the danger that we've got, because when you replicate the products, you get them similar outcomes. When you got similar outcomes, people will say, Takaful is the same as insurance. Yes, the last line of defense, but Takaful, we give surplus sharing. And I remember clearly one example in terms of what the agents are doing in the early days of Takaful. They will go around, with the financial statements of an insurance company who shall not be named. Look here, look at how much money the insurance company is making, right? Now look. All this money goes to the shareholders, basically, but not in Takaful. In Takaful, we give you surplus sharing. Some of that money goes back to you, is it? Right? So that was the simplistic way of looking at it. But surplus sharing, to some extent, is actually not quite right, because effectively, when you look at Tabarru, you're looking at a donation. Have you ever come to a situation whereby, you donate something, to the poor, and then later on you say, hey, by the way, can I have some change, please? Because what my donation was more than enough to pay for the rent for this month. Can I have the change, please? No. Can I have the surplus, please? No. You don't do that, right? So by right, the surplus should not be distributed. The surplus should be kept for future claims. Maybe to use for the purpose of, for the poor who are not able to afford Takaful, VBIT perhaps, you see. But unfortunately, surplus sharing has become a marketing tool, right? Which, to some extent, is not that great for the Takaful industry because of the fact that, it makes it difficult for it to develop even further than what it currently is. So anyway, I've spoken enough. Just one thing here which I need to mention as well. So one downside of replicating the insurance product and then providing surplus sharing is that there will be extreme pricing pressure for the Takaful companies, for the Takaful product, extreme pricing pressure, which sort of implies that, you have motor insurance, for example, you buy motor from company A, conventional, buy a motor for the Takaful company B, for example, same price, as it were, but then the Takaful company B has got to give you surplus sharing. Well, basically, Takaful or portion of the conventional company A does not have to pay you any surplus back, is it? So what happens? That means the strength of the Takaful company over time will actually reduce. Because effectively, the conventional company keeps all the profit, the Takaful company has got to share the surplus, basically. So if you go over time, Takaful will be at a disadvantage because it will never become an adult because it's been deprived, if you like, in terms of sustenance. Because surplus, to some extent, is sustenance that makes it grow stronger. Okay, so we will discuss these issues, and then there will be, one very interesting discussion that I hope you can all contribute, which I'll mention later. So anyway, can I invite our panel members to the stage? I will not introduce them formally because I think they're already quite familiar for those of you. And then you have also on the screen, a snapshot of their background. But let's just say that they are very well-experienced people that we hope that we can learn from this afternoon. And I know this is just after lunch, it's a graveyard shift, but hopefully, we can make sure that, there is some excitement, if you like, in terms of the subject that we are going to actually discuss. So if I invite Tuan Haji Tramizi, Yusri, and then of course Professor Dr. Engku to the stage. By the way, we're not discriminatory against female, right? She is so, so we are very privileged that she's able to make the time to come and participate in this panel session. So after that long discourse, I hope I've laid, if you like, the stage, if you like, for this panel session. Can I start with Tramizi? I mean, just now I alluded, the concept of Tabarru, but before that, maybe I can start off with the model itself, the Takaful operating model. As mentioned just now, that we moved from the Mudharabah model, the modified Mudharabah model, and then when maybe Takaful came in, I think you were recruited to actually run the business, and you actually started the Wakala model. I know, a bit controversy just now, but let's assume that you started it. All right, and then maybe discuss a bit in terms of why.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullah. Thank you, Zainal and Actual Partners, for inviting me. Sometimes we talk about models at Takaful. It sounds so scientific, so glamorous. Actually, model is just to pay the Takaful operator. It's just that. Okay? Because Tabarru, when you Tabarru to pay, that money, Tabarru, we cannot use to pay the Takaful operator. You can't. You pay claims. So you need another contract to pay the Takaful operator. Okay? Mudharabah, share, Wakala, Ju'ala, whatever. So it's no big deal. Okay? So just keep in mind, it is all about to compensate, to reward the Takaful operator for managing the fund. Okay, so so any contract that is Shariah compliant, okay, that's not against Shariah, you can use to pay. Okay, so that's first things first lah. Okay, ladies and gentlemen, many things I want to say, but we have to go back to basics. Zainal did mention about Tabarru and all that, okay? Because the difference between Takaful and insurance, one word, Tabarru. That's it, all right? So that's the first thing, okay? I don't want to go back to, we have to go back to basics, but I can't spend this time here. Okay, so I will invite you to listen to the podcast, Legends, okay? Many things I want to say, I've said there. So I try to minimize, not to repeat, so I say new things today. Okay, I also have a YouTube channel, I want to promote a bit, Takaful Tutor, YouTube channel, okay? It's supposed to be 10 episodes. So far I only finished 6. 4 to go, but give me time. I'm a retiree, so I take my time. Okay, I go back to basics, okay? Okay, Mudharabah. Why did I change it to Wakala? Okay, I started Takaful. I joined Datuk Fazli, the first Takaful company, and Mudharabah was sort of imposed on us. So I didn't know any better. But all the while I was thinking, is it right or not? Because the first thing is very risky. This Mudharabah model. You do your work first. At the end, if there's surplus, you get paid. Otherwise, you don't get paid. The Mudarib under under Mudharabah model cannot take expenses from the capital provided. Okay, so it's very risky to me. Wow, what if there's no profit? Okay, so I thought it was a bit risky to operate because I was in charge of general, and I found it a bit risky to have that model. Okay, number one. Number two, Tabarru and Mudharabah, to me, contradict one another. One is profit, one is Tabarru. How come they exist together? So that was something not right. Okay. And then Zana also alluded to it, that you share the surplus. You see, the Muslim CEO should be paid as the same as the conventional CEO, right? Salary should be the same. We have to have twice the surplus to be able to pay the same. Otherwise, how do we do it? Okay, I say that again. You have to have twice the surplus of an insurance company because we share 50-50, for example. Okay, but you can't pay half the rent, half the IT. It doesn't work that way. It's the same. Okay, you have to compete. And then the claims is not half. Claims are the same. Takaful sure claims ratio lower. No, it doesn't work that way. So I found it's a little bit strange to have a Tabarru and Mudharabah in the same contract. It contradicts one another. So, it's a conflict situation. So, I decided to look for answers, and I found that actually Shariah is very broad. Mudharabah is not cast in stone. So there were other models. Because, as I said earlier, is to compensate the Takaful operator to manage the fund. So there are other contracts. Then I learned, Wakalah, Ju'ala, and all that. Okay? Now, everybody, today they're trying to say that I'm the one who started Wakalah in Malaysia. Okay lah, a bit can lah. Okay? But actually, the idea came from this guy, Zainal. Okay? He introduced Wakalah to us at Maybank Takaful. And we said, this is much better. We get the money up front. We can pay our staff. It's not just the agents that pay. The staff also can be paid. The rent had to be paid. Otherwise, you just wait for your surplus. No. Zainal had an experience, I think, the Bank Al Jazeera, right? So he introduced to us Wakalah. So I don't want to take all the credit lah. So I just chiplak for him. Okay? All right. So Wakalah. So why did we choose it? Because the situation for Maybank Takaful a little bit different from Shariah Takaful Malaysia. Shariah Takaful Malaysia can afford to do it because their shareholders were not so in a hurry to make money. All the Majlis Agama and all that, they were all shareholders. So as long as you don't make losses, they are quite happy. Whereas Maybank Takaful, where I went after that, Maybank Takaful, for some of you who don't know, is now known as Etika. Okay, it was Maybank Takaful under the Maybank Group. Maybank had insurance arm called Maybank Fortis, which had Maybank General, Maybank Life, and then they wanted to complete the picture. They had Maybank Takaful. So I had a conventional bank who owns 70% of Maybank Takaful. They're in a hurry to get business. Not only they are a conventional bank, they are truly a business venture. And then Fortis had 30%. It's a foreign bank from Europe. So I cannot tell them, Mudharabah, and then you wait. So I had to look for. Luckily, Zainal came up with this, and I thought, okay, I think that sounds good. At least we can pay our staff, and we are quite. But at the end, still we had to share surplus because the norm already. By the time Maybank Takaful started, everybody was so used to surplus already. So we had to share surplus as well. So we found Ju'alah as the two. So we shared. But we, instead of 50-50, which was the norm then, we decided, okay lah, 80-20. 80 to Maybank Takaful, 20 to the customer, and I played down the surplus sharing. We had products that was for good deeds, so we say, no need to take the surplus, after all it's so little, why don't you hand it over to charity and all that. So we try to change the mentality of people. So it's okay with the bank group because it was through the bank and they were not really looking for the surplus sharing. And then those days, surplus sharing was not like now, digital, you know. You have to issue check. And who's going to issue check for 3 ringgit, 40 cents, that sort of thing. So we tried to play it down as little as possible. So 80-20 was sharing, but now cannot lah. Bank Negara say you cannot take more than the participants, right? So it's 50-50. So I think I'll end that, okay?
Okay, thanks for that. I think I'll come back to you on that model, but let's move on to Yusri. I think the training aspect of it is something that we can never play down. I think it's very, very important. It's quite mind-boggling that, even in our education system, in terms of financial literacy, is not a key kind of component, in terms of our curriculum. But let's move to the role of IFIM in terms of what actually it does provide in terms of services to the Islamic finance industry in Malaysia generally, and perhaps to Takaful specifically, if you can mention. Are there any aspect of the existing curriculum that addresses also the soft side of Islamic finance generally? So what I mean by soft side is that, the way that we actually sell Islamic finance is that, it is something which is different from conventional, okay? We're looking at Islamic finance as well to address how it can be mobilized to assist those who currently cannot access the financial services because for one reason or another, for example, affordability. So perhaps, in terms generally, what kind of courses does IFIM offer, and then maybe also perhaps give some kind of clarity in terms of what IFIM is doing or will be doing in the future about how to actually mobilize Islamic finance for the underserved in Malaysia.
A very long question, Tuan Haji. But first of all, Assalamualaikum warahmatullahi wabarakatuh. Bismillahirrahmanirrahim. Rabbi shrahli sadri wa sirri amri wa tamil lisani yafqahu qawli. Actually, one thing I learned about talking to a legend, right? You never say no to them. So when I actually got a message from Tuan Haji Zainal, Yusri, can you participate in the program that we have about legend? Of course, naturally you will say yes, right? That's the rule, right? I never thought there's going to be a session like this, actually, where I have to actually speak on stage with all of the legend. And I think I'm pretty a tall guy, but I think I'm the smallest guy this afternoon, right? Anyway, thank you very much for this opportunity to actually share my thoughts. And I think some of you may have heard of IFIM, some of you may don't. I think what I can share is that IFIM stands for Islamic Banking and Finance Institute Malaysia. We are about 30 years old. We started in 1995. It started from a department in Bank Islam, just across the road, right? Bank Islam, a training department in Bank Islam. It became BERT and eventually become IFIM. So we are 30 years old. And behind IFIM, there are only two members. One is the Association of Islamic Banks, and the other one is Malaysian Takaful Association. And that's, I think, one of the reasons I'm here. And of course, our primary focus is to do training, but before this, one of the key role that we played for the Takaful industry is that we conduct the Takaful Basic Examination, TBE, right? We conduct the TBE examinations, and before eventually we hand it over to MTA. And Alhamdulillah, under that TBE structure, we managed to, onboard, I would say, help agent about, I think, close to 100,000 agents to become, to actually take on that examination. And what we did is we also converted the TBE from a classroom examination to online. This happened during COVID-19. When all the classes, our classroom all over Malaysia was closed, we decided, at the time we have 22 branches or 22 exam centers. We had to close, but we opened our 23rd branch, which is online, and that started in, if I can recall, 27th of April 2020. Started with about 3 people for the first session, but by the end of the year, by 31st December 2020, we had more than 30,000 that went through the online. So that was the business model, or rather the structure that helped IFIM survive COVID-19. So very much thankful for the Takaful industry to actually help us to survive during COVID, and that was for TBE. And like Tuan Haji was saying, what do we do? Not only that we have done, we do Takaful basic examination, but IFIM also has a sweep of qualification, catering for at every level of the Takaful professionals, fundamental, and we have intermediate level, intermediate qualification in Islamic finance, and certified qualification in Islamic finance. But I have something I want to share with you. There are, I think, about, as I mentioned to you, 100,000 agents, at least that went through our TBE, and I was made to understand there's about 70,000 active agents currently, right? Thereabouts. And do you think how many people have our qualification? It's actually purpose-built, funded partly by the industry. Do you think 10,000? Do you think there's about 10,000 holder of the certificates? 1,000? No, actually less than 50. So less than 50. Less than 50 is and partly maybe because maybe we have not really engaged with the Takaful industry on a robust basis. But at the same time, we also realize that perhaps the culture of lifelong learning has not been embedded, right, within the industry. At least that's our observation, and it's something that we want to continue helping the Takaful industry. And our group, our view is always that we must help at least the industry to be able to serve the customer better. And this is actually verified when we actually launched the Future Skills Framework. Future Skills Framework. This is a future skill framework of. It's a document developed by Asian Institute of Chartered Bankers, Malaysian Insurance Institute or AII currently, and IFIM. And it covers of 8 sectors, and and among the sectors are the insurance and Takaful. Right? And of course, the agent also covered under that. And there one area that is specific in terms of insurance, which is for the actuarial management. That's one. But one thing we also realize, all these roles, there are 159 job roles. All of the roles includes the skill of Shariah compliant, right? And this is something that we see from all the agents. There are not many agents that has the knowledge of fundamental knowledge on Islamic finance. They have knowledge on Takaful, specific on the product, but when it comes to general knowledge on Islamic finance, it's still room for improvement. And this was something that IFIM wants to actually be in that space to help. Would that answer the question?
What about is there anything in the curriculum that talks about, I mean, when we talk about Islamic finance or Islamic sort of the Islamic system, as it were, we're talking about as well inclusiveness, in terms of, for example, I mean, I think how can actually, is there something in the curriculum that says how we can actually expand, the B40s, if you like, to actually subscribe, to Takaful, to Islamic banking? Because I think a lot of people out there perhaps as well, B40 don't even have a bank account.
I think that's a good question, but I want to take this opportunity to, I think one of the things that, one of my hobbies to say that I've been doing lately is to trace back what have happened for industry. And I think the Takaful industry celebrated our 40th anniversary this year, right? Islamic banking was last year, Takaful this year. And one of the things that I love to have a look is actually to look at the original reports or jawatan kuasa, laporan jawatan kuasa that was submitted. I've been reading the jawatan kuasa for penubuhan Bank Islam, and yesterday I got the report on the jawatan kuasa penubuhan syarikat Takaful that was submitted in 1984 by almarhum Professor Ahmad Ibrahim to Tuan Mahathir. So and one thing I realised when I first realised it when I was actually reading the laporan jawatan kuasa penubuhan Bank Islam, summary that this report has one interesting feature: the philosophy behind what certain things are doing. And when I look at this report on penubuhan syarikat Takaful, dia berbunyi macam ni, falsafah insurans Islam. So kalau tengok dia punya what was said in terms of the falsafah that actually been articulated by the jawatan kuasa is penghayatan semangat saling bertanggungjawab, right? Kerjasama dan perlindungan dalam aktiviti masyarakat demi untuk kesejahteraan ummah dan perpaduan masyarakat. So even then you can see the thought process even at the policy level in terms of actually the idea of inclusivity is there, right? The idea actually making, if you go detail in terms of the report, the idea of actually making sure financial literacy is already there embedded within that. The only thing is that whether that has been manifested by the industry the last 40 years, I think is still ongoing, right? You can see that why we come up with this, the value-based intermediation, for example, right? And because we see that there are underserved segments that are not able to access a product called Takaful. It's a good product, but sometimes it's not accessible, right? So, and for us, how do we go about it? I think it's not about promoting financial literacy. It's basically to embed within SLE. We have a very good, very robust structure called agency for them to be able to be the interface with the potential subscribers of Takaful and actually create awareness. So that will be the thing I think IFIM can do, and IFIM we are trying to do. And if you look at one of the things I also noticed, right, from my reading, for many years, the last 40 years, in fact, we have been looking in terms of the, I would say, looking at the financial sustainability of the Takaful operator, right? I stand corrected, but I think there's also a need to look in terms of the social sustainability that can actually be developed through the Takaful industry. And if you look at the financial sector blueprint, right, there are even segments that actually highlighted the role of Takaful in terms of actually ensuring the societal well-being, right? Especially in response to certain pandemic, there was a discussion of that. And what do we need to do? I think, of course, financial literacy must be there. Financial literacy has been driven even at the regulator level. Even has been done at the association level, but the things that how do you actually make it actually more accessible, right? How do you keep more simple? Even and partly is because maybe I notice when we do financial literacy, even if you look at this conference, you notice that sometimes we use bahasa English. Right?
Sometimes only.
Yeah, I'm saying understatement, right? Sometimes we use bahasa English, but I think there must be a need to make sure that penyebaran ilmu harus dalam bahasa Malaysia, right? So that people will be,
especially the B40 group.
B40 group, kan? Tapi kita kadang-kadang the problem is that we tend to use this English. Of course, from a discussion point of view, right? We can do that. Even when I look at VBI, for example, right? It's interesting. I look, Asri, I did not check yours, but Asri, but I've checked some of these Takaful operator. Okay, you will have VBI, right? You click VBI, right? And then you click, okay, yes, they have English and Bahasa Malaysia. You click Bahasa Malaysia, of course, everything at the preamble are all Bahasa Malaysia, and it goes back to English, right?
Okay.
And
important point, very important point here.
And just imagine, VBI, inisiatif perantaraan berdasarkan nilai Does it make any sense to any of us? I'm asking you, right? It doesn't, right? But the point is like this, right? I'm not saying that it's wrong, but how do kita memasyarakatkan ilmu takaful ni to that level? Because why? For the last many years, I think, no fault to anyone, we've been talking about awareness in takaful, but we actually promote the actual fact we're just translating technicalities into something that in Bahasa Malaysia, but people don't understand, right? That's my point, right? I
think it's something that worth actually taking note of, because I mean, you know, my excuse for using the English language is that, you know, I did my Malaysian certificate of education equivalent to MCE, as it were, you know. So my whole journey, education journey, has been in English. So I'm one of those pre-independence baby, you know, before independence. So that's my excuse. Okay, but I think the point is very well made, that if you want to actually reach the B40, they don't speak English very much, you know. I mean, maybe, you know, they do games, they do internet, you know, and movies and all that kind of stuff, you know. But yeah, I think point well taken. Something that we should actually talk about going forward if you want to reach the B40 group, a lot of which are Malay Muslims. We need to actually look in terms of our communication part of it. Let's move on. I mean, Dr. Nku, first of all, thank you very much for making the journey here. So you're the first Shariah scholar that, you know, the audience here has met this morning. I'm sure they've met Shariah scholars before, but for this event, you're the first one. And perhaps, you know, just to set the stage, you know, perhaps you can start by explaining to the audience what is the process that Shariah goes through before arriving at a judgment. Because I usually look at Shariah from the perspective of, just for simplicity, you know, you go to a court of law, as it were, and you have a judge there sitting in the court of law, and you want to present a case to him, you know, in terms of why is it that he should decide in your favor. And from that perspective, you know, you go through all the evidence, and there's a process that goes through it. So if we were to now move to the Shariah, I mean, you know, you as well, you know, as a Shariah scholar, you've been asked, you know, I'm sure in many instances, to actually provide so-called advice, whether effectively something is Shariah compliant or otherwise, you know. So this is a very, very heavy responsibility that the Shariah takes on. So that's one. What's the process? Is there a process that you go through before you then come to a decision whether in fact something is Shariah compliant or otherwise? And perhaps you can actually give an example where you personally had to rule against a particular request, because of course not every request that goes to the Shariah is approved as Shariah compliant. I mean, you know, the product or otherwise, you know. And also, and I'm sure, you know, when you say no, it's not Shariah compliant, you know, they'll probably ask for reasons for it. So maybe you can actually elaborate in terms of how you actually manage this, you know, this kind of situation.
Okay, Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Thank you very much, Tuan Haji Zainal, for that question, and also the other panelists who have actually opened the path on the discussion in this afternoon. I hope all of you are still awake. Talking about decision, I don't like to use the word judgment because you are talking in the context of going to the judge. I don't think Shariah scholars are judges who are going to make judgments. Basically, it's more of seeking opinions with regards to the status of a certain action or product or structure that they wanted to do. So basically, from a Shariah scholar perspective, normally we are based on principles. Normally, it's very much principle based, and through time, the principles are later, the scholars derive rules from those principles. So we start with principles, then there's some rules, relevant rules derived from those principles. So it's very different from, let's say, the thinking of a commercial banker or commercial Takaful operator. So they are thinking more in terms of capitalistic analysis. The Shariah scholar, they will think in terms of the Shariah principles and the relevant Shariah rules. So when it comes to giving an opinion, we normally try to see how those principles would be applicable to the current matter that is brought before us. Okay, so in doing so, first thing is actually we need to understand the issue. I'll just take a simple example because just now we have seen a lot of elaboration on the Takaful model. I'm talking about Mudharabah and then Wakala and then whether Ju'ala or Wadi'ah or Ta'awun. Okay, which one are they all permissible from the Shariah perspective? So like Ajit Tamizi was saying, your perspective is always about commercial, like even in the morning, where do we get the payment? What is the source of income to the operator, because they are managing it as a commercial entity. So then you look at Mudharabah and why you think it's not good enough, and you think Wakala is better because you think that Mudharabah is risky. Wakala, you can have your fee up front, and then you can use that to pay off your expenses. Okay. But a Shariah mind would work differently. So we will look at the Mudharabah, the so-called transaction. So the key thing that you mentioned that triggered the Mudharabah to be used in the first place was when Datuk Fadli actually saw the word profit in the financial statement of a conventional insurance company. So that's also the key thing that the Shariah analysis is, because when we talk about using surplus as or treating it as profit for the purpose of Mudharabah transaction, so we will have to look at what is surplus actually. So when we analyze surplus, we see that actually is based on the original contribution, which belongs to the participants, and the operator will be the manager, we call it Mudarib, who is going to work with this contribution, the money contributed, in order to generate profit from the original contribution. So let's say the contribution is X amount, and then you're going to manage it. Now, the way insurance work or Takaful works, actually you manage and you deduct all the expenses from that X, manage, and then you deduct also the claims, you deduct also the reserves. So in all probabilities, the X will be less than X at the end of the day, right? But from the insurance perspective, that is surplus and that is profit. But from the Mudharabah principles perspective, definition of profit is what is over and above the capital. So in the context of this arrangement, the original capital is X. So if it's profit, it must be more than X. But in the way Takaful works, it is always lesser than X. So it will not be defined as profit from the Shariah analysis, and therefore Mudharabah doesn't work. Because how can you share profit when there's technically no profit? Then people would say, well, it's not really Mudharabah, it's modified Mudharabah or quasi Mudharabah. And they try to look at it from a different angle. And maybe some people will argue, well, maybe because of the customary usage, I mean, the understanding of the industry that surplus is equivalent to profit, can we therefore treat it as profit for the purpose of a Mudharabah model? But if you strictly apply the original principle and the rules, it doesn't qualify. So that's the main issue from the Shariah angle, not from the commercial angle, in terms of the Mudharabah model, is how do you justify sharing of surplus as a profit sharing under Mudharabah?
Yeah, I think that's good. I think basically you're quite right. I mean, I think we all agree with that. But I think this goes back again in terms of evolution of Shariah as well. Because in the early days, you know, that was basically the thinking. So, you know, we can argue that at that point of time, as far as Shariah was concerned, you know, after they saw all the arguments put in front of them, they probably took the view that, you know, for the lack of another viable operating model, perhaps we have to go with this. Because I think that's a very important point, that Shariah opinion can change over time.
That's one thing, but what I want to highlight is actually the Shariah opinion would depend very much on their understanding of the matter before them. I think the understanding and the way surplus was presented to the Shariah scholar when they approved the product as a profit in the Mudharabah is that they describe surplus as profit, which maybe, I'm not sure how detailed was the analysis by the Shariah advisor at the time, but the fact that it was recorded as profit, like from accounting treatment, and it was also understood as profit by the industry. So maybe the Shariah scholar just take it on face value is profit, without understanding the full mechanics of how that calculation of surplus is actually done. So that's why they come into that conclusion. So that's why there's a legal maxim that says that al-hukmu ala shay' far'un an tasawwurihi. The ruling on a particular matter is actually derived from the understanding of the issue that is brought before them. So if you understand that the issue is profit, then you would say that it's qualifying for Mudharabah treatment. But if you understand it as just a residue of the capital after minusing everything, then it doesn't come into the definition of profit in that sense. Yeah.
So maybe you can share as well an example whereby effectively you had to decline, a particular request where it's not Shariah compliant. Just to give a contrast, as it were.
Yeah. I will just give you an example of maybe, because I'm also sitting with the Negara, so we had a number of proposals. Remember when they introduced, Negara introduced MAR, minimum education requirement, a rate basically for family. I think there are many of you from family or life takaful. So there are this maximum limit, right? And the first year you can only take up to 40% of wakalah fee, and you have to keep 60% at the participant risk fund in order to actually maintain. Actually, the intention of the regulator is to maintain the health of and the solvency of the Takaful fund. So instead of it's eaten up by the wakalah fee, because as you said earlier, there's a lot of cost in terms of agency. So you have to charge a higher wakalah fee so that you can cover your expenses. Okay, this is basically from the operator's perspective. But Negara thinks that's not really healthy for the Takaful risk fund. So they put a limit, 60. There's a gradual, I think you know about MAR requirement. So a number of Takaful operators who have less capital, they find it difficult, because if they cap their wakalah fee to 40%, whereas their cost, including the agency alone, already 40%. So what more about the other costs and expenses? So they would need additional capital. So in the convention side, you had the FinRe arrangement. So we had a number of operators coming to, together with the Takaful to try to get a FinRe, Islamic FinRe arrangement to be approved by Negara. So we had at least 3 proposals. One of the proposals was approved, the other was not approved. Okay, so basically it's based on what I was saying earlier. It's based on principles and the relevant rules related to that. So one of the proposals, the principle of contract they suggest was, or they proposed was musyarakah. So we look at how the proposal comply with the musyarakah rules. And we found that, it complies with the musyarakah rules, and therefore we approve the proposal on FinRe using musyarakah contract. The other proposal, they also wanted to do Shariah compliant FinRe, but they proposed to have hibah bi thawab or hibah bi iwad as a principle. Hibah bi iwad actually is like you make a gift or donation with the expectation of getting something in return. Okay, so this proposal was rejected because the understanding or the rules related to hibah bi thawab is used or is allowed in situations of like filial kind of arrangement, like a father would support the son, or a friend would make a gift. Of course, there's an expectation that, well, later my friend would make a gift to me as well. Okay, during birthdays we make gift. When you have birthdays, you expect some gift as well. So this is the nature of hibah bi thawab. But when they put it into a FinRe arrangement, it's a commercial arrangement. So it's no longer construed as a gift. It's more like a transfer, a kind of buying and selling. You pay to get something in return, and then when you construe it as an exchange contract, it actually contravenes a lot of other issues as well in terms of the arrangement. So this is just example. It's very much principle based, very methodological. That's why we call it usulul fiqh. So it's very Islamic jurisprudence, science of Islamic jurisprudence, very scientific way of determining whether it is allowed or not allowed.
Okay, that's important, because what you say, Prof. Angku, is that effectively there is a process that you go through. But one thing as well, I'm not sure the audience caught this, is that the way in which Shariah looks at agreements. And this is something I learned very early on in my involvement in Takaful, and that is basically the utilization of contract types. So when you say a contract is a Mudharabah contract, you know, as far as the people who are in that contract, they know what their responsibility is. All that remains to be decided is the compensation. Same thing when you say it's a wakala contract, it's an agency contract, the parties know what are the obligations. All that involves is required is actually to determine what are the terms. This is different from commercial contract, whereby you got a blank sheet of paper and you can write whatever you want in that blank sheet of paper, and even include small prints in it, because of the fact that, you know, effectively is what the parties agree. Right, so this is something that you have to consider. You know, that effectively the contract type, as it were, you know, will determine responsibility of the parties, and what the Shariah is not too concerned about perhaps is in terms of the compensation side of it. But I've got I think, is anything you want to add to that one? Is that correct?
Yeah. What I want to add is actually that's normally the case if you are going to use a known contract, nominate contract we call it. Then if you choose like a particular nominate known contract with defined rules, then you have to follow the rules. But in Islam, we also have what we call uqud ghairu musamma, non-nominate contract, meaning you can innovate a new contract. So it's like a blank sheet. But for that particular innovation, currently they call it uqud mustajidah, new contract, new innovated contract. But you have to make sure that the terms and conditions that you agree in that new blank sheet must not contain any elements which is against the principles of Sharia, like prohibitions of riba, gharar, all those things. So that is the other option. So whichever route that you want to take, there are rules, but you can have a blank sheet, but there's parameters to that blank sheet. You cannot just go beyond that parameters like prohibition of riba, gharar, and whatnot.
That's interesting, but I don't think there's been any introduction of a new type of innovation contract for a long time. Have there?
There have been, yeah.
Could you give an example?
One of that is perhaps the sukuk to some extent, and even takaful. Takaful is because the term takaful, we don't see that in the original nominate contract.
Yeah, but takaful is like
I mean, for
product,
the takaful
it's not a contract. It's not a contract. Takaful is not a contract per se.
It's a tabarru. The tabarru part of takaful is like, for me, is a new form of tabarru.
Okay, the tabarru aspect of it.
Yeah, not the commercial aspect, what the wakala thing.
Okay, that is very interesting. I will stop at that because I want Tarmizi to actually explain. He's not a Shariah scholar, but I want to, from the perspective of takaful, what is the understanding of tabarruk, so that we can then and the audience can understand. Because after that, I'm going to talk about, you know, medical takaful, medical insurance, and this I'm going to open up to the audience here, because we need to brainstorm. You know, what is the Sharia compliant solution to the problem that we have now, whereby we got insurance and takaful contribution, skyrocketing to the roof. So maybe start off with you, Tamizi. What is the animal called tabarru, and how is it applied in takaful?
Okay, as I said just now, if you ask me, what is the difference between insurance and takaful? One word is tabarru. Okay, so what is it? If you look at the takaful contract, they will put there, it's a gift, donation, blah, blah, blah. Okay, you give something without expecting anything in return. Basically, that's it. But in Takaful, so some of my clients, when I explain this, Tabarru, so Sukati lah. So I can Tabarru as much as I can, right? No. In Takaful, it is donation with condition. Okay, it's a bit different from, correct me if I'm wrong, all the Shariah scholars here. Okay, when you do a sadaqah, say a poor guy, you want to give money, you don't give condition, right? You just give him money, it's sukati, right? But when you give condition, I give you this 2 ringgit, but don't use to buy drugs. Don't use to whatever. Okay, only to eat. You condition, right? So it's a donation with conditions. That's why we put there. If this happen, we don't pay. If this happen, we pay. It's donation with condition. Okay, that's one in the context of Takaful. Donation with conditions. So we put all the conditions. If you have no license, we don't pay. Drunk driving, we don't pay. See? Okay. Secondly, okay, is that we determine how much you tabarru. You cannot simply, okay, it's tabarru, donation, is it? Okay lah, I pay 5 ringgit lah for medical, 1 million cover. I give 5 ringgit. Cannot. You donate as you like, we pay our claims as we like. Why not? Oh, cannot. So it's 2 ways, right? You pay as you like, claims we pay as we like. Cannot so we say, okay, for 100,000 cover, the contribution is 100 ringgit per year, something like that. So it's a donation with conditions. Okay, so this is not new donations. When you have, for example, flood at the moment or the tsunami, everybody will contribute. Muslims, non-Muslim, Malaysians are very generous, very charitable. The only difference is that tsunami, after the tsunami happened, only you want to donate. Takaful, you donate before it happens. That's the difference. So, for example, let's say somebody dies in the office, and say, hey, our brother died lah. Let's collect lah, pity the guy lah, got 3 children, wife doesn't work. Collect. He died, then you collect. Okay? Also tabarru, isn't it? Okay? But the difference is Takaful, we collect first the actuary. The actuary is actually a very sophisticated word for fortune teller. They can read the future.
Fortune teller is haram. Fortune teller is haram. Okay.
Okay. They can read the future, so they say, you collect 100 ringgit. Yeah? So we collect in the pool all the tabarru. That's why people say Takaful is risk sharing. Okay? But please remember, Takaful is risk sharing among the participants, present and future. In Takaful, the participants are both the insured and the insurer at the same time. Okay? So when you read a Takaful contract, a lot of people tell me, Tamizi, you just change the words only. Insured, participant. Insurer, Takaful operator. Premium, contribution. Same lah. The difference is very subtle, but fundamental. That's why I need a lot of training lah. You see, because a lot of people don't understand. Sama je. When the contract says, we will pay if you die, who is this we? The Takaful company. Yes. But not with his money. He's paying with the participants' risk fund. When the insurer says, we will pay, it's his shareholders' money. See, it looks the same. It's not the same lah. It's like living together and getting married, no? Looks the same, right? Oh, I'm sorry, a lot of good Muslims say they don't know about living together. Don't know, huh? Okay. Same lah. Yeah. We've lived together for 5 years, got 3 children already. Okay, what? The lightning didn't strike us also? You see what? No. It's the belief, right? It's the belief. For the Muslim, they believe, must get married. So coming back to Takaful, is the tabarru, because we have to overcome another problem. That is the exchange contract. Okay? Exchange contract is not an issue. It's just that we are exchanging money for money. Exchange money for money is not really a big issue. Unequal exchange of money for money. So all these are the issues lah. But I don't want to go back to all these fundamentals. Okay, I assume all of you know. Those who don't know, watch my YouTube channel lah. Okay, watch my YouTube channel and tell your students also and your staff to watch it. Okay, it's a long story. To overcome this, Tabarru. But Tabarru is only among the participants. Okay, but then when it comes to Malaysia, we have a problem because this is a country that practices dual financial system. Okay, who are the insurer in Takaful? The participants. So if you collect 10 million in the fund, but the claim is 12 million, that's a deficit of 2 million. By right, we should go back. By the way, that day you paid a contribution of 100 ringgit, not enough. Another 10 ringgit, please. Because you are the insurer as well the participant. But we cannot do that because Takaful will look bad. Insurer never ask for extra, Takaful ask for extra. So, nak kena jaga juga. So what we do, we have the card in Malaysia. Okay, but the card must be repaid. If the card is not repaid, it becomes insurance. So a lot of people, they talk about it, but the card must be repaid. Okay, it doesn't matter whether it's paid by the current participants or future participants, but it cannot be paid by the insurer, the Takaful operator. Otherwise, it becomes risk transfer already. So, to answer Cik Zainal's question, okay, Tabarru is a donation, but it's a condition, and we have a lot of contracts, all the conditions. If you do this, you don't have this, you don't pay this, we don't pay the claim. Okay, so but that is only one part of the contract, the Takaful contract, the participants' risk fund. So the insurer, the Takaful operator, what does he get? He must have a commercial contract. So it's a Takaful contract, okay, the Tabarru, the Ta'awun, then you have to have a commercial contract to pay the. Okay, it's very strict. You cannot take premium from money from here, pay here, from here. It's very, very clear. So, but people don't understand this. They look at the contract, it's the same. It's the same. When the claim happens, take money, pay, the guy get. But they don't understand. The claims department takes some from the participant risk fund, some takes from the PIF, you know. So it's a combination of things. But on the surface of it, doesn't look much difference. So this is where the training is very important. I give you one example. After I retired, long ago already, okay, I went to training. So I was training, I was Etika, so I went to Academy Etika. I trained there. So I went to a branch that I never went before, a small branch, Batu Pahat. Never been there before. Normally I only go to JB, never go to, okay? And normally the agents training, only the agents attend. The leaders never attend because they are too proud. Okay? Dah pandai lah. But because Batu Pahat was a small one, only one agent, the leader came and he sat at the back. So he was listening me teaching the. At the end of the class, during lunch, he came to me, Tuan Haji, macam tu ke? Alamak, saya dah buat Takaful 10 tahun. Salah apa je? You know, just because they are seniors, they don't attend. Too big to attend. 50 of you only, right? Come on. I'm still learning. I see my guru there, Professor Syed Musa. You know, I feel embarrassed sitting up here talking to him. You know, we have to learn. Sometimes, you know, you have to go down and really listen to people. You might miss the important issues. You know, we were operating on Mudharabah for years. Then one day, Sheikh Nizam Yaqubi said, what you are doing is not Mudharabah. Huh? Malu je. Malu je. Just like Prof said, it's a profit sharing. You put in 100 ringgit, you must get 100 plus X. If you get 50 ringgit, that's surplus. So, no. Okay? So anyway, so I hope I've answered your question about.
More than that. I think we've set the stage now. We've talked about training a bit. We've talked about and financial literacy as well. And Professor Dr. Nku has explained to us in terms of the process that it goes through before they come to a conclusion whether Shariah compliant or otherwise, and the fact that there is this thing called innovation as far as contract is concerned. And give an example in terms of Takaful, whereby we have the Tabarru. Here is conditional Tabarru, as it were. So that's a new kind of contract. Now, topical. Our session basically will be an extra 15 minutes long because of the fact that, two of our next panel members will be in intense discussion about, a very important topic, which is medical premium inflation. Okay, they're in discussion with our regulator. But the point here is that I'm not sure whether people here understand about insurance per se, from the concept of how it works generally. Because when you buy an insurance contract, because I'm going to look at medical premium first from an insurance perspective, i.e. conventional insurance perspective, and then I'm going to flip over to Takaful, given the understanding that we have actually basically learned from our distinguished panel speakers. So when you buy a medical insurance contract product, can I have a show of hands who has got a medical insurance contract here? Okay, quite a few. The rest are a bit shy. I think they do have. If they don't have, I think the company that they work for have.
Tawakal.
Tawakal. Inshallah, you mean. Okay, so anyway, the way people tend to think that when they buy insurance, medical insurance, that they have to claim. Otherwise, rugi lah, basically, because you have medical insurance and therefore, you must get something back. But of course, they forget that when you have a health problem, you'll never get back to what you were before you had a health problem. There'll always be implications in terms of long-term kind of health. But it's not the insurance. What I'm trying to say here is that when you actually make a claim, you're not actually depriving the insurance company of their profit. Not really. Because ultimately, the insurance company, do have a pricing mechanism whereby they will actually be able to reprice and then recover to some extent whatever losses they've incurred. But more importantly, basically reprice the product even higher because they anticipate that the trend that they see in terms of costs of medical cover is going upwards. So there's some element of anticipation there in terms of pricing. So ultimately, when we buy medical insurance, it's similar to the way to pooling as well, right? I.e. risk sharing to some extent, even though it's risk transfer, but effectively it's also risk sharing because the insurance company will pass on that additional cost, as it were, to the policyholders, either now or in the future, right? But sometimes we don't see that, right? So what that means is that, whenever we abuse the insurance contract that we've got, abuse here is a very strong word, but I think maybe a better word is overutilize. Because effectively, if you go to see your doctor or your GP or your specialist, as it were, they would basically, recommend, certain treatments or certain kind of procedures, which may or may not be necessary. Because, how many times have you gone to a hospital, and then they ask you, you have a letter of guarantee or not? I'm told that, if you have a letter of guarantee, there is a different cost structure to if you are paying for yourself, you see. I.e., basically the insurance provider will basically have, they know that, because the insurance company is paying for it, then perhaps they can offer more services as well. They see you as a customer rather than a patient, if I can just give you that, fair or otherwise. That's something that has been described as far as private healthcare is concerned. They look at you as a customer. But anyway, going back to my example just now, you have a situation whereby you go to your GP or your specialist. They look at you and they might recommend tests, they might recommend procedures, which may or may not be necessary, because of the fact that they say you got a letter of guarantee, and therefore the insurance company will actually pay for it. So you say, oh, all right, okay, yes, I'll take that. Because when it comes to medical, you can never be too careful, all right? So if basically, the doctor feels that you need to take certain tests just to be sure, as it were, you will just say yes, why not, is it? Because you've got that medical card, as it were, and therefore, it's not going to cost you a penny, as it were. Maybe it will cost you time, but it will not cost you a penny. But indirectly, what you're doing when you actually consume, they call it a buffet syndrome, whereby you actually, you're in a buffet basically, and then you go for the most expensive food first, as it were, because you're paying the same amount. Everybody else is paying the same amount, 200 ringgit, whatever it is now to cost for buffet. And then you just go and go for the most expensive kind of food on the table because of the fact you've paid for it. Okay? So what happens is that, because of this buffet syndrome, people overconsume the medical kind of services. And when they actually price the product, mostly they start from historical experience. So if we see basically that, this cost is going up, they will also possibly also anticipate that it will continue going up in the future. But the point I'm trying to make here is that effectively, it is basically the consumers who are paying for it. It's not the insurance company. Insurance company only passes on the cost to the consumer in the form of higher medical premium, right? So so when you do use your medical card, think about it. If you overconsume, your renewal premium in the future is going to go up. There's no such thing as a free lunch, right? So that is insurance, okay? And of course, for insurance, whenever there's profit, it goes to the shareholders. So shareholders will actually benefit when there's a profit. The problem perhaps in the past is that maybe the insurance company is not doing enough to manage the claims, right? Make sure that one, there's no fraud, right? I've seen cases whereby, you have medical claims which are very, very high, and then when the insurance company go to, when the insurance company go and actually check about it, they found it's a bogus claim, basically, because they have not monitored the claims closely enough to spot the fraud early enough, you see. So the element of claims management perhaps is a bit weak in the past, and that has actually resulted in medical inflation. So what the insurance company has done is that they have actually introduced the concept of co-payment. So when you have the co-payment, it does mean that you as a user of that medical card will have to bear some of the cost, the medical cost. So when it comes up from your pocket, you probably will ask then to the GP or specialist, how much does it cost? Before, you don't ask that question because your company is paying everything, you see. But when you have to pay something for it, you ask how much does it cost? And then you have to make the decision, I've got to pay 10% of that amount. If it's not necessary, I don't really, I want it, you see. So there's the whole idea of a co-payment, just to become, just to make sure that the utilization of the services will not be as much as was before, and therefore claims experience is better than what is expected, and therefore you don't expect your insurance premium to go up. Now let's move to Takaful now. Now remember Takaful now, you have this concept of Tabarru fund. So this is where basically all the money is being pooled, for which is used to pay claims. So the question now is that, what happens when there is a claim? Well, there's a claim, a medical claim, then of course effectively it gets charged to the Tabarru fund. All right, this pool. Now most Takaful company basically only have one pool. One pool. And all the Tabarru, Because insurance company, for example, family Takaful company sells a lot of products. Medical is just one of it. There is also a death benefit, personal accident benefit, all kinds of benefit. They put all the Tabarru into one pool. So within that, and all this is all Tabarru, it's called donation as it were. So because of the fact that you are in one pool, it could be that even though your medical product is actually not making any surplus, is losing money, but because of the surplus in the risk pool, right, maybe from other products, basically, that actually can be used to, in a way, subsidize the losses, on the medical product, right? But of course, it cannot be sustainable over the long term, right? Money is money, and subsidizing loss-making, so-called loss-making product is not actually in the best interest of the participants of the pool anyway. Because even though you got Tabarru, basically, you have Tabarru, basically, it is a case of, yes, you have Tabarru, but you have to also, as an operator, be responsible that you want to allocate the cost of the claims in that pool, fairly to all the participants, because we're still based on risk-sharing concept. It is still based on risk factors is right. Risk factor, not risk share, risk factor. Risk factor is there, but also risk factors. So you don't want to put loss-making products into the pool. So the question I've got to the people here in this room is that what do you think can be done in terms of this escalating medical inflation? Anyone wants to actually volunteer to give their sort of solution to the problem we've got? Because something which is quite topical now. Yeah, please.
Comment, yeah? Not drama.
Yeah, just a quick one first. I sat the TBE exam. Just curious, do you know how many languages you can sit in? 3 languages. Interesting, right? I was surprised. You can sit the exam in 3 languages, the TBE.
Really?
Yeah. I leave you all to guess what the third language is. But, okay, medical. I think the biggest mistake on the medical is the fact that we started the cashless. It was clear starting cashless medical card was going to be a downfall. And it's come back to bite all of us. It's not a surprise. Okay, the abuses are so clear. The problem is coming from the hospitals. It's clear. 2 areas I say where it's coming from the hospitals. The first one is, even though they know the day before you're going to be discharged, they never discharge you before 12. They discharge you in the afternoon. So that room basically got 2 charges. This has been happening.
You mean in terms of the fact that you stay for another day, they can charge you for another night?
After 12 o'clock, they charge you a second day.
Really?
For the same room. And they never ever discharge you before 12. Okay? That's what? Daylight robbery. Okay? It's not only the cost, but it's the caregivers, 3-4 family members sitting there frustrated. It happened to me so many times. Okay? So it's the culture of the hospitals. They got away with murder for so long. Okay? The second thing is the dual charges. That's fraud.
So, dual charges?
Yeah. Self-pay or insurance.
Oh, okay. Self-pay or insurance. Yeah, okay.
Dual charges fraud. It's blatant fraud. How can any industry have dual charges? And it's not just 10% more, 20% more. I got a case. Somebody who went for cardiac, they had a package, 2,000. They wanted to play through insurance, cannot. The cost, 15,000. From 2,000 went to 15,000. How can? You can't do that. It's totally wrong. So, just have to go back to the source. So easy. If you put it into the social media, this dual charging, all these 2 charges, it's enough. We'll be blown out of proportion. Why are we so scared? Insurance industry, speak up. So the third thing is, many who are unhappy is because we haven't claimed and we are paying a 40% or 50% increase. What's the solution? We have done it all the years. Motor insurance, no claim discount. Just introduce no claim discount, so you're not going to get the abuse.
Whoa, very strong words there. That means you got something to share.
Okay. Of course, the insurance company and the Takaful company, we are the very soft target lah. Hentam us is easier than hentam the medical profession. Okay. Now, this is not new to the industry. Okay. For those of you who are old enough, okay, I think, okay, we had the same problem with motor workshops. Motor workshops. Fraud, same. Overcharge, same. Blah, 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 blah. Okay? Of course, commissions and all that, another one. But this one is, but we could address them, okay? Because the workshops are not like the doctors. The doctors, they speak good English, they dress up very nice. So we are scared of them. But the problem is still, I agree with you, we have to address it there. Because same, workshop also had fraud. And then we addressed it because we came up with, okay, this claim, all the spare parts are all published already, very transparent. For this repair, this is the time used. We came up with all this. So we've had experience already to address this, but we have to treat the medical profession just like we treated the workshops. Serious. Go hard on them, you know, because it's eating us. But of course, all the authorities, we are the easy target lah. Hantam us first. Oh, you better don't reprice, keep it there. So that's one thing. Huh? Okay, so it's just like the workshops, and we have addressed this before. Just approach it in the same way. In the same way. Okay? Except the workshop was a bit afraid of us because they needed the business. The hospital also need the business with us, from us. Okay? Now, for the customers, okay, Takaful customers lah, okay, we need to educate them. Okay, Tabarru is an act of piety, you know. Okay, there are hadith that say that if you donate, God will spare you from tragedy, give you good health. I think they should think about this as well. Because you see, insurance and Takaful, we are founded on the principle of the fortunate many who God never give health problem, compensate the unfortunate few. Yang sakit tu sikit je. Okay? The fortunate many help the unfortunate few. But the problem is, the fortunate many never get sick for the first few years. So, wah, rugi lah. I pay. No. So I have to change the mentality. Here's my money. I tabarru. Whoever gets sick, Alhamdulillah, God didn't give me the sickness, gave him. So use my money to help. May Allah spare you from the sickness in the future, you know. So we have to address the fortunate many. The unfortunate few, they got their claim. They should be happy, kan? Even they are not happy. Because why? They claim 10,000, they got 3 only. So still not happy. So insurance, Takaful, very difficult business. So we cannot address the issues like insurance. Insurance has got many weaknesses. Okay, many. If we are like insurance, we'll inherit all the weaknesses. We have to play the game differently. I'll talk later on. Okay, you got time? Okay, but the problem in the last 40 years, we want to be like insurance. Everything insurance, we go to the Shariah scholars, can you do this or not? Why? Because conventional can do. We push them to the limit. Hey, cannot. Can you find or not any justification? The more we try, the worse it gets for Takaful. Don't play the game anymore. Stop it. Play to our strength. And what the strength is Tabarru. Okay? So what do I get from this Takaful? 10 years already, never claim. You got rewards in the hereafter. Hey, you see, we have very charitable people out there. It's just that they cannot connect to Takaful. And can Takaful? Quotation, please. It's like when you give quotation to the masjid, ask the three masjid to give quotation. The lowest one, I will give quotation. Sadaqah. It cannot be like that. There must be a change in mindset. Okay? That the reward will be better health. God will protect you from hardship, give you health, and all that. Okay? The Shariah scholars are here. So people used to ask me, so how much is the profit for Takaful? And they're talking about the surplus. Okay? I will say, if you intention is good, Allah will give you 70,000% benefit, return. 70,000%. Wow. Goldman Sachs can give 10% only. Okay? So just check. I just checked just now. Surah Al-Baqarah, verse 261, where Allah says, you spend in the way of Allah, you spend $1, Allah will give you like a seed that grows 7 branches. Each branch got 100 seeds. So one, you get 700. They actually calculate in his head 70,000% return. JP Morgan cannot give this. This is the Almighty. Okay? We have to go to this. Okay? Don't sell products anymore. Sell emotion. Sell emotion. Okay? Sorry, stop. Still sell product, but with emotion. Okay, correction. Okay? Okay? I heard somewhere, very beautiful, no more hard sell. H-A-R-D. Hard. H-E-A-R-T sell. I think that's where we are strong. Otherwise, the fortunate many will never be satisfied. Never. Okay? Because they give money. And I learned from some of the agents, I said, how come you all don't sell the protection products? You only sell the investment link? Or protection because rugi. I pay, I lost. I pay, I lost. At least investment, 20 years time, I get my money back. You see, they don't want the reward from Allah. They want their money back in 20 years. I don't know. Do something about the mindset change. Thank you very much.
Thank you, Tabarru. I think we need to conclude because we're running out of time. But you know, we started off this panel session by looking at Takaful models existing, and I think what should be the Takaful model of the future. I think it goes back to the issue now in terms of how we actually provide this kind of protection, if you like, to the underserved, because it goes back to what Haji Tramizi was mentioning just now, the issue of the fortunate many to help the unfortunate few, unfortunate few, as it were. So, social takaful, social takaful, whereby we go on that basis. We go on the basis of, in a way that for Muslims we pay zakat. We have to pay the zakat as a percentage of our earnings, not earnings, capital, as it were, and if we treat it like that, whereby we are setting aside a certain portion of our wealth, as it were, to help others who are in less fortunate kind of position, I think it's something that can be done, because I think from the perspective of the commercial takaful, it's already there. You've got the existing takaful operators. They are operating on a commercial basis. They are rewarded for that. The shareholders get their return on their capital. But here we're not looking at basically business venture. We have to move takaful away from being a business to something more akin to a social kind of organization. And that might require a different operating model that we have currently. Because I think the current operating model suffers from quite a few weaknesses. I think one is the fact that, in terms of the operator, they have a profit motive, and perhaps the product that they have on offer are the ones that maximizes their profit in terms of maybe the wakala fee that they charge, all right? And also the point as well is that, maybe the products that they offer are the products that they want to offer, not what basically the market requires. So that means, some products that you require are not in the market just yet. So, and also there's a cost of distribution here, and the cost of distribution is not cheap, and we have to think again in terms of this social takaful. It must have a distribution kind of channel as well, because people don't just wake up and they want to buy takaful. So what could be a distribution channel for the social takaful? And it could be the Majlis Agama of each state. It could be the Pusat Pengurutan Zakat, because they've got offices everywhere in the country. It could be Jabatan, one of the government office departments, as it were, because they've got offices all over the country. But the point here we're trying to make is that we need to look in terms of conventional, in terms of the current existing takaful model, where basically are the weaknesses, where basically are the costs being incurred, and see how we can actually reduce this. We call it frictional costs, because ultimately what you want to do is that, for example, is $100 or 100 ringgit, if you like, is the contribution. We want to actually make sure that at least 95 ringgit of the 100 ringgit goes actually to paying out benefits to the participants. So out of 100 ringgit, 95 ringgit, or even better, 98 ringgit goes to what? Paying out, compensating our participants, as it were. Currently in takaful, because of cost, distribution cost, for example, reflected in the wakala fee. I mean, the wakala fee is 25%, or maybe even 30%, even higher than that for some products. Maybe the out of 100 ringgit, maybe only 60, 70 ringgit at the max goes to paying out claims, which means there's a frictional cost of 30 or 40%. This is before factoring the fact that for medical insurance, maybe the providers are actually, overcharging the insurance companies in the first place. So that is probably the problem statement that I think, I would like, all of us to take back and figure out, how can we move takaful to the next stage? What kind of operating model we need in order actually to address this one need, social takaful, as opposed to, what's the word for commercial in Arabic? Tijari. Tijari takaful, right? We have tijari takaful now. It's serving its purpose. Don't touch it, fine, all right? But we also now need, social takaful. If I will just close on that thought and pass it back to to Hassan.
Okay, thank you so much. Give them a round of applause.